Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zitis, and this week's title is The Blurry Future. Now, gold's price saw tremendous price action during the previous days and has refreshed interest among traders and market participants. The precious metal initially surged to an 8-year high price that seemed to confirm the current risks regarding the global economy, and then corrected back lower on a sudden drop during Monday's US session. The aim of this report is to briefly explain what happened in the past days, but also the most dominant fundamentals driving gold's price at the moment. In the end, we will also provide a final overview with our own personal opinion on where gold's price could be heading. We would like to start with the interview that Fed Chairman Jay Powell gave on Sunday, in which he took the time to provide the FOMC's perspective on the US economy. Even though his comments had a sense of caution and were not loop-sided, in our opinion, what he said could be considered balanced with a sense of optimism. For example, he did say that the economy's GDP could drop within a range of 20% to 30%. He also noted the unemployment rate could reach levels last seen during the Great Depression of the 1930s. However, on a more positive note, he stated that a rebound of the economy could be expected during the second half of 2020, which is the most optimistic comment made. This comment provides some confidence to the general public that the US economy could be heading for better days, but no evidence has been provided yet. To be able to see actual results if the economy has improved or remains down, traders will be looking at the financial releases from the US coming up on the 21st of May, Thursday. All the releases will be regarding the economic performance in May and will include the initial jobless claims weekly figure, the Philly Fed Business Index, and the Marquette Manufacturing and Services PMI readings. Yet, even if an economic recovery is at the gates, the risks are still increased from many perspectives, and especially on the coronavirus outbreak front. Fears of a new wave of virus spread could lead to repositioning countries into lockdowns. As long as a vaccine has not been found yet, fear will continue to loom. In the past days, and according to many sources, another Chinese province was set into lockdown as increased COVID-19 cases were noticed, so the danger remains. These type of headlines could invite the buyers for gold's price, while any news on a vaccine tend to be inviting the bears. Yesterday, among the headlines that may have forced the dramatic sell-off for gold may have been the news that drug maker Moderna had seen some optimistic results on its initial trials of a vaccine development. Yet the article by Reuters that referred to Moderna indicated the process could take another 2 months until getting to its final stage of testing, and the results of its effectiveness will be clearer. Another front that tends to be a gold price mover, which was emphasized in our latest cutting edge report, is the new intensified confrontation between the US and China. This matter had kept gold price moving throughout 2019 as it increases economic risks significantly. The US is blaming China over concealing valuable information regarding COVID-19's outbreak that could have saved thousands of lives. Yet the US is now taking action to fight China, trying to move supply chains out of the Chinese mainland and minimize its access to high-tech products. This is a new version of last year's trade war, but could be fueled with more anger for the reason we mentioned before. This incident could have fueled gold's price in the previous week until yesterday when it dropped. Yet, let's not forget, China and the US are the two largest economies of the world and could destabilize global trade and supply chains any minute. As a conclusion, according to many reports, analysts find many reasons to remain bullish on gold, mostly to the reasons we mentioned before. However, the strong sell-off yesterday indicates some market participants saw gold moving in an overvalued price range and felt that selling was the only action to take. As a closure, we see increased risks persisting in the global markets, and the uncertainty prevailing could push gold's price to either direction. Moving to our technical analysis, this is gold's 1-hour chart. Now, due to the sudden correction lower gold's price performed yesterday, we find it suitable to point out 4 resistance levels instead of the usual 3. We make a start with our R1, that's the 1739.65. That was last tested today in the Asian session but was not breached. Higher, we have the R2, 1749 line. That was last seen yesterday after gold performed its second part of moving lower as indicated in our chart. This is the candle we are referring to. Our highest levels are the R3, 1758 line. That was tested earlier on the 18th and was breached only to reach our final R4, 1765 hurdle, the highest price gold has reached since 2012. In the opposite direction, we have noted the S1 1729 support level that was tested yesterday and today in the European session but was not breached. Lower, we have the S2 1721.35 line that was tested many times on the 8th of May, and our final support line is the S3 1710 that was last seen during the past week. Please note the RSI indicator below our chart is aiming towards the 30 level, possibly confirming the bearish momentum performed since yesterday. Now, if you found something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time and enjoy solid trading.